Our top priority is to protect the health of the U.S. economy. 2 years into this administration, Treasury continues to serve at the forefront of our nation's response to some of its most urgent challenges. We have advanced our country's domestic and international economic priorities thanks to the resources that you've provided us. Our top priority is to protect the health of the U.S. economy. 2 weeks ago, we learned of problems at 2 banks that could have had significant impacts on the broader banking system and the American economy. In the days that followed, Treasury worked with the Federal Reserve and the FDIC to take decisive and forceful actions to strengthen public confidence in the U.S. banking system. We took actions to protect all depositors at the 2 failed institutions and provide additional liquidity for banks. This was designed to mitigate risks to the banking system. It's important to be clear. Shareholders and debt holders of the failed banks are not being protected by the government, and no losses from the resolution of these banks are being borne by the taxpayer. Deposit protection is provided by the Deposit Insurance Fund, which is funded by fees on insured banks. So I would agree with that. We have now had 7 months in which 12-month inflation has been declining. We're seeing reduced pressures on supply chains, a dramatic decline in shipping costs, for example, that was an indicator of supply chain problems. The shifts in work, means of work during the pandemic gave rise to big increases in housing prices and rental prices, and we can see in current indicators that's now stabilizing or coming down, and that will eventually pass through into lower inflation. So it is the job of the Federal Reserve to take actions to bring inflation down, but these factors are lowering it, and the administration has taken actions to bring down healthcare costs, to bring down energy prices, and to lower the costs that burden American families. I think it's utterly imperative that we raise the debt ceiling. That is about allowing the government to pay the bills it has already incurred. It has nothing to do with future spending. And a failure by the government to pay the bills it's incurred is something that would be economically and financially catastrophic. It would have a horrendous effect on financial markets, where the United States is seen as an utterly secure country in which to invest. U.S. Treasury securities are seen as the safest bedrock of our global financial system. The U.S. dollar serves as the world's reserve currency. We would be undermining that, and even coming close to the debt ceiling without raising it. We saw in 2011 that led to a downgrade of the U.S. credit rating, and this will raise borrowing costs for American households and businesses for a good long time. If we failed to raise the debt ceiling and had to cut spending to match the inflow of revenues that we had, we would be certain to have a recession or worse. It would be a dramatic cut in spending, and the financial market consequences would be disastrous. I strongly urge Congress to raise the debt ceiling, and to fail to do so would lead to economic and financial chaos. So we're working on this order and trying to determine exactly what it should cover. We have been focused on the most sensitive technologies and sectors that are critical to our national security. We think it's important to work with other countries to make these restrictions effective and these are areas where I think we have the greatest chance of working collaboratively with our partners. But we're certainly open to engaging with you to discuss what the right coverage is. Would look forward to conversations there. I would say around supply chain issues, there are many initiatives underway to strengthen our supply chains. That is a very important focus of the Inflation Reduction Act when it comes to batteries, clean energy, and reducing our dependence on China, for example, where many of the critical minerals. So we are taking a range of actions on those critical issues. Different countries are moving at different speeds and in different ways to address climate change. And we are encountering conflicts with other countries because of differences in our approaches. I think as a fundamental, we agree with the European Union that disclosure of climate-related risks is important so that investors are able to make good choices about where they invest and understand the risks in different companies. So as a general matter, we believe, as the Europeans do, in disclosure, which is behind Chair Gensler's proposal. I know he's received many comments on, but we are engaging with the European Commission to understand the implications of their proposals. We want to avoid unnecessary market fragmentation, which different approaches can produce. We want to maintain a level playing field for U.S. companies and make sure that they're not burdened with incompatible regulatory requirements around the world. So this is an important issue that we're focused on addressing. I've issued a directive to the IRS that clearly prohibits them from using these funds to target individuals or small businesses making under $400,000. And let's be clear, the focus of this, there are really two focuses of this money that's been allocated. One is to greatly improve customer service, both for individuals and for businesses, modernizing the IRS. And the second is to address the tax gap. And the tax gap isn't related to individuals or small businesses making under $400,000 a year. It's wealthy, very high-income individuals, complex partnerships, and corporations that are, by and large, underreporting and underpaying their tax. And the money will go to hiring trained, experienced accountants and tax professionals who are able to do the complex audits that are necessary to recover those funds. So there would be no motivation to want to target taxpayers making under $400,000. And I have directed the IRS that they may not do so. In the case of the two banks that were put into resolution, Silicon Valley Bank and Signature Bank, we invoked a so-called systemic risk exception. And we did that because we determined, and when I say we, I mean supermajorities of the FDIC. Actually, the vote was unanimous. The FDIC board, the Federal Reserve Board, and myself, after consulting with the president, we felt that the failure to protect uninsured depositors would create contagion, and that there was a risk of runs on many banks that would not only undermine the security of depositors, but also compromise the ability of the American banking system to meet the credit needs of our country, of households and businesses.